Greetings and welcome to the latest installment of Legal Bites, the official podcast of Cummings and Cummings Law, where we focus on helping businesses and their principals re-domesticate out of volatile legal and tax environments like the state of Washington to more predictable pro-entrepreneurship, pro-growth jurisdictions. Today, I am reviewing a recent report by Jennifer Dowling, writing for Fox 13 Seattle, entitled Starbucks Announces Details on Layoffs of 200 plus Seattle headquarters employees, referring to the ongoing exodus of businesses large and small from the evergreen state in favor of sunnier climes and greener pastures. I will then conclude by explaining how owners of small and medium sized businesses can leverage federal and state law to their advantage to relocate their existing LLC or corporation out of Washington state or another jurisdiction to a new state the right way while maintaining their existing federal employer identification number, contracts, credit history, track record, and bank accounts. But first, a brief introduction. My name is Professor Chad Daniel Cummings, and I am an attorney and a certified public accountant serving clients in matters of business, tax, and commercial law. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, together with a bachelor's degree in accounting and a master's degree in federal income taxation, in addition to 13 professional licenses and certifications spanning accounting, tax, audit, financial planning, and of course, the law. My firm website is www.cummings.law. Now on to business. Starbucks filed a notice with Washington State last week. 224 corporate jobs are getting the axe at its headquarters in Seattle. That is the second round this year for those keeping track. Fox 13 Seattle got the breakdown from economists at Seattle University. About 120 of those positions are IT workers. They are not being cut because the work went away. Actually, there is more work than ever. Rather, they are being let go because the work is moving to Nashville, Tennessee, and those employees declined to go with it. The second group worked on store design. Starbucks announced the Nashville office last year, as I have reported in earlier installments of Legal Bites. Everybody in Seattle knew this was coming. One of the professors interviewed put it plainly. They knew the IT function was going to Tennessee. Employees were offered the chance to relocate, and now we are finding out that about 120 of them declined. Fox 13 also reported something else worth ruminating on. Washington State stands to lose as much as $750 million in tax revenue in the coming years because Starbucks is expanding its home in Tennessee and leaving the evergreen state. That's $750 million from one company deciding to go elsewhere. Now, Starbucks is not some fly-by-night operation that showed up in Seattle for a tax break. The company was founded at Pike Place Market back in 1971. You probably know its origin story. It is as tied to Seattle as any business in America is tied to any city, and it is still putting its new operations in Tennessee. That should tell you something. Tennessee, like Florida, like Texas, has no personal income tax. Washington State currently has no personal income tax either, but it does have a business and occupation tax that hits gross receipts rather than profit, a new capital gains tax that the legislature passed in 2021, and a general trajectory towards higher taxation that has been getting worse for the better part of a decade. That's not my opinion. Go read the reports, including several very illuminating reports prepared by the Tax Foundation. The city of Seattle added its own payroll tax on top of the state taxes back in 2020. Here is what makes this story useful to a small business owner. Starbucks is not moving the headquarters, at least not yet. The article says so, and the economists also say so. Of course, they're probably not in the boardroom listening as things are being discussed, but that's neither here nor there. What is happening right now today is quieter and more common. A company keeps the flag planted where it started, but it puts everything new somewhere cheaper, function by function over years. This is the same pattern we've seen with ExxonMobil, with AT&T, with Goldman Sachs, with JP Morgan, across a variety of industries. That works when you have 100,000 employees and can afford two of everything, but it does not work if you run a company with 15 people, or particularly if you are a solo consultancy owner or a digital nomad. You do not get to have a Seattle office and a Nashville office and let attrition sort it out. Rather, you're more likely to have one location, one payroll, one set of filings, and one state taking its share, which means the state you pick is not a background detail, it is the whole thing. Now, as I mentioned earlier, some states like Florida and Texas have no personal income tax. And in both Florida and Texas, most small and medium sized businesses also do not pay an income tax. For a pass through entity, and by the way, according to the Federal Internal Revenue Service, over 95% of small and medium sized businesses in the United States are pass through entities. So this statement likely applies to you. That difference passes through directly to the owner's personal income tax return. Tax Foundation data indicate that the average business moving to a state without an income tax keeps more than $12,500 per year, and that figure can easily reach six and even seven figures for high earners. A giant company can drift out of a bad state, one department and one job description at a time, and call it expansion. But a small company does not necessarily have that same luxury. Now, with this context in mind, redomestication is the lesser known legal process of transferring a company's legal state of domicile, which is not the same as your personal residency, by the way, to a new state without dissolving it, without creating a new entity, and without triggering federal income tax consequences, but only when performed with the strict formalities required by the Federal Internal Revenue Code, applicable Treasury regulations, and the statutory frameworks of both the destination and departing states. When performed by a competent professional, and that is an important caveat, the company will retain its existing federal employer identification number, contracts, credit history, and bank accounts. All of that to say there is zero operational or financial disruption, but only if you get it right the first time. That is why it is so important to work with a credentialed and experienced professional and save the DIY for home improvement. I have successfully completed redomestications from all 50 states. Yes, that includes Washington, and for limited liability companies, partnerships, subchapter S entities, and subchapter C corporations. So if someone is telling you it cannot be done, what they are really telling you is that they do not know how to do it. Now, a couple of important provisos here. First, foreign entity registration is not the same thing as redomestication. Do not allow yourself to become confused by terminology. Foreign entity registration, also referred to as foreign qualification, among other somewhat misleading terms, does not change the company's legal state of domicile. Actually, it does the opposite by keeping the entity in Washington state indefinitely and merely adding yet another layer of compliance and tax obligations in the destination, thereby leaving you anchored to the state you thought you were leaving. Meanwhile, a traditional merger, which is still not the same thing as redomestication, creates a new distinct entity in the destination state, may and often does require the issuance of a new federal employer identification number, and can trigger serious tax problems. Finally, dissolution, also known as starting fresh, should not enter the conversation at all, because dissolution terminates the company. Dissolution is the legal equivalent of administering a lethal injection to your enterprise. Dissolution is a going out of business maneuver, not a relocation mechanism. Dissolution is often a taxable event, and when performed incorrectly, can expose the owners of the company to unlimited personal, yes, you heard me correctly, personal, joint, and several liability for the company's liabilities, known and unknown. That is because the so called veil of liability protection no longer exists because the company no longer exists. Simple logic. If you think dissolution is a cute cost saving opportunity, you may be in for a rude awakening. And if you have a so called professional suggesting dissolution as a relocation stratagem, please seek better advice before you make a critical mistake you cannot undo. Now, redomestication, when paired with the change of personal residency, and not or, and a reduction or outright cessation of business operations in Washington state, can reduce or even eliminate state tax exposure there for the entity and its owners. Don't take my word for it. That is what the federal Supreme Court has said for decades. Now is the time to consider acting before the Washington legislature considers changes to that state's law to hinder or even eliminate the avenue of redomestication. If you have questions regarding potentially redomesticating your existing LLC or corporation out of Washington state, please utilize the link in the description for more information on this process and to schedule time for you and I to speak one-on-one about this specific situation. If you don't see a link in the description, check the bio. Again, my name is Chad Daniel Cummings of the firm Cummings and Cummings Law, and I hope that you found this information informative. As always, the information in this presentation is necessarily general in nature and is not legal or tax advice, nor should it be construed as such because that advice definitionally must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my many earlier presentations on these timely topics, please visit my firm website at www.cummings.law, not .com, but .law to schedule time for a consultation. I look forward to that opportunity to speak and perhaps even work with you very soon.